Happy Friday, traders. What a week in markets. Look, precious metals have been causing absolute chaos in markets this week. And at some stages, they actually became untradeable. But look, the selling at the moment has stopped. And I stress at the moment. Look, for gold is pretty clear cut. The levels to look out for. 4,000 on the downside, critical support. If in any stage 4,000 breaks, do not buy that dip. You could see some very serious liquidation. Top side, immediate resistance is at around about 41.50. Then again, sellers are sitting at 4,200, and it'd be very, very tough to get through 42.50. So look, there's your levels, and good luck with that. But anyway, look, whatever happened this week, it really doesn't mean too much because today is US CPI day. CPI matters, it matters a lot. So today, the expectations, look, month on month for core and headlines around about 0.3, 0.4. But year on year, we're looking for CPI, headline and core both to come in at around 3.1%. Look, market with those expectations seems to be okay with it, even though CPI is marginally creeping back up. Obviously, that's not good, but they still feel comfortable that with the Fed cutting rates, obviously Fed funds is at 4%, so it's still way above CPI. But what the market may not be comfortable with is if it comes in well above expectations. Can that happen? Yes, of course it can. Let's see. But that's the risk tonight, obviously, right? If this CPI number comes in above expectations. Now, if we have a look at equity markets, at the moment they don't care. Nasdaq, S&P are sitting just underneath record highs. CPI, who cares? But obviously, again, stressing there is a risk tonight, and if it comes above expectations, those equities will get smashed. As far as the currency market is concerned, it has been super boring for months. We've just seen range trading, choppy trading, but look, the US dollar obviously looks a bit bid. The market has obviously been trying to put on a short US dollar trade, hasn't been working. And again, US CPI tonight is probably going to give us finally maybe some direction in the currency market. But what you need to watch out for over the number, those, is what happens with US bond yields. US 10-year yields at the moment, they have been trading around 4%. That is a critical level. Obviously, if those 10-year yields do directionally fall below 4% properly, it's going to be bullish for markets. They're going to love that. But if we spike back above and we base off 4%, obviously that's not too good. So if you are trading tonight, look at the reaction to the bond market and yields, and that'll basically tell you whether or not we're going to be trading at risk on or risk off. It's not too hard, gang. Anyway, look, enjoy your weekend, good luck with your trades, and we'll check back in with you next week.